You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for everyone's favorite options educational program. It is time once again for Options Bootcamp. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-compelling Options Insider Radio Network, upon which so many of you are binging. That's my first reminder. If you're just listening to Bootcamp, make sure you expand your horizons. Nearly a dozen other programs coming at you on the network. We'll keep you busy, keep you engaged with great options content. So wherever you're getting this, of course, make sure you upgrade to the full network. And of course, if you like what you hear, if you have the energy, if you got the time, leave a review. It does help all the new folks continue to discover the content, just like our friend here did, RG. Remember, a lot of different platforms all over the world carry this stuff. Some of them don't always have the same 5-star or whatever review mechanics. So a lot of people like to go to our app in the Google Play or the iTunes or even the Amazon Fire App Store and leave reviews there, just like RG did. RG said this app is very simple. You can listen to all the old episodes if you are new to options. That part of the app is called Options Bootcamp. Well, he's a little mistaken. The app's for everything, but you can listen to Bootcamp clearly in the app. And you can check out Options Playbook as well. Again, that's also a sister show to this one. You should be listening to that one if you're listening to this. They've been going for over a decade, and they put out content daily. 5-star. So thank you, RG, out there. Yes, we do. There's content in that app pretty much every day. So check it out on whatever device you're rocking out there right now. And of course, if you want to go above and beyond, you want even more exclusive content in your life, theoptionsinsider.com/pro is the place to go. So I had a great pro Q&A with Mr. Tony Saliva last week of there. And of course, we have Options Oddities, end of the week. It's the beginning of the month. That means we'll be giving away our pro trading crate very soon to all of our pro members out there, as well as, of course, for the exclusive pro podcast feed, exclusive live access to this, everything else we do here on the network. Where do you get all that exclusivity? Theoptionsinsider.com/pro is the place to go. As we go now to the scenic options wonderland known as Frankfurt, where we are joined once again by the black-headed one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show on yet another Fed Day. You and I seem to chat on Fed Day a lot, sir.
Yeah, I noticed that. I was going to message you and tell you, just so you know, I'm going to be trading. Oh, look, I just got filled in something.
We expect the dings in the background here on the show, sir.
Ding.
We got our 3/4 of a point as expected. Anything surprising you? The market seeming to like what it's hearing, sir. We were selling off earlier in the session, and then it's kind of been a just straight shot north, about 40-odd handles in the S&P just in the last 15, 20 minutes. So the market apparently liking this. Mr. P, what are your thoughts?
Well, I mean, what I was saying in, just in our daily video that we send out every day is that I didn't really expect any surprises from the actual interest rate hike. I think what the important thing about today is what people say, what the Fed people say now. Because it takes about a year for these interest rate hikes to make their way into the economy. And it hasn't even been a year yet. And so will they slow down a little bit and wait and see? Which, I mean, I was a big proponent of, like, let's get these interest rates raised. I thought they missed the boat 2 Fed meetings earlier. They should have started. But now I'm even in the camp where, hey, man, like, let's just wait and kind of see a little bit. And I think there's a lot of chatter about that. So this Friday's unemployment number is going to be big. We got CPI next week. Next month's unemployment number is going to be big. Any inflation data is going to be big. So the title of my most recent daily video is, "This is the first day of the rest of the year."
Yes, very much so. And it is also the beginning of our next segment. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Let's get to business here, answering some Q's. Sometimes you folks oblige us by answering our questions here on the show. It's like you did last week. We asked you last week in our question of the week, since the start of the pandemic, every earnings season has only delivered somewhere in the neighborhood of 85% of the amount of movement that was priced into all their straddles at the start of the season. So if you took all the straddles at the start of the earnings season and you average them out, say, okay, here's what they're all worth. And if everything moved exactly that amount, that would be 100%. So 85%, obviously less than that, obviously showing less movement, less volatility than was priced in at the onset of the season. So we thought, we're in the middle of earnings season right now. It's a good time to pick your brains on this topic. What are you guys expecting? What's your outlook for this earnings season? Think it's going to be somewhere about the same, somewhere in the 85 to 90% ballpark? Is it going to be north of 100%? So more movement than was priced in at the onset of the season. So that'll be a bit of an action-packed season, or below 80%, which we term pretty boring. Mr. Dan took umbrage to that terming there, but nonetheless, we thought kind of boring. If you're selling premium, that's kind of what you want. You want something to be boring. It could be boring and still exciting for a short premium person. Those two things are not mutually exclusive. And we had a weird result. We had a weird tie on this one. These numbers were kind of weird all week for this one, really. And it ended up going out 36.8% each for north of 100%, so action-packed, and then 85 to 90%, about the same, both at 36.8%, which is weird. We don't see that too often in our polls, and then 26.3% saying pretty boring. So Dan, A, have you overcome your umbrage at us calling it pretty boring? And B, what are your thoughts on the fact that our audience kind of tied with pretty much split between an action-packed season and kind of more the same?
Pretty boring is typically pretty good. I'm still sticking with that. But yeah, I mean, I guess it's like exactly split. I mean, I guess that's not super unexpected, because this quarter was unique. I mean, only in the regard that, the expectations, the estimates were lower than they've been since the beginning of the pandemic, which a lot of people take out of context. That doesn't mean like losing money or anything. And it doesn't even mean bad earnings. It actually means still really great earnings, but just not as great as it's been since April of 2020. So, I can see how some people were thinking action-packed, because of that, like, hey, there's probably going to be a lot of surprises. But, when it all comes down to it, I watch earnings very, very closely. I'm, actually just got filled on an earnings trade while we were on this call, and I'm going to trade them as soon as we get off this call. So I don't know. I mean, I think about the same is probably usually the right answer. But yeah, maybe a little bit of an uptick. I could see how people would think that.
Let's get out into our question of the week this week, mixing it up a little bit this week, having a little bit of fun. We were talking about it on the network last week that, with all these sell-offs, we've seen a lot of names and some bad announcements recently from both Meta and Amazon in the first couple of weeks of the earnings cycle. Both of them were hanging out pretty close to $100. Meta was actually a little bit below it. Let's see, now that everything's rallying in the post-Fed love fest. Meta is still off about $1 today, 94.25. So it is below the 100 level, and Amazon hanging out at about 96. So they are still pretty close, kind of moving in lockstep today. When we tweeted this a couple days ago, actually, they were both around $100. We said, hey, Meta, Amazon, come under some heat lately. Both of them trading right now right around $100, which raises a kind of fun question. Very simply, which one would you rather buy? Is it Amazon? Is it Facebook/Meta? Or neither? You're just not in for either one. Mr. Dan, what is your vote? And then more importantly, what do you think our audience is voting for?
Man, well, I own a little Amazon, full disclosure, so I hope it's that one. But man, I'll tell you what, what's the time horizon is what the real question is. Because Meta is working on really, from what I can see, revamping their company to get into, just all this metaverse and such. I would say if the time horizon is 10 years, I'd probably go Facebook. I think it's really gotten buried recently, but, Mark Zuckerberg, love him or hate him, was pretty darn smart. So I'd probably go with Facebook, but I think they'll both be strong over that period of time.
You think our audience is going for Facebook as well?
Yeah, I think so.
Interesting. You could not be more wrong, sir. 68.9% saying Amazon.
Wow.
18% only for Meta. They're not loving the new Meta Quest, sir. And 13.1% saying they want nothing to do with either of them. I could certainly see maybe a little bit of bias towards Amazon, just because people are kind of, what the hell's going on with Facebook right now, right? They've had issues for ages. Apple kind of cut their legs out from under them with all their new policies on their devices. Meta can't really track you the way they used to back in the day where they made all their money. And now they have this big pivot into virtual reality, which is costing a ton of money. It hasn't really made an impact on the bottom line. So I can see some folks being a little bit hesitant with Meta. Clearly our audience is. If you disagree or agree, head on over to @options. Make your voice heard right now, listeners. There's another way you can make your voice heard. You can always chime in over there at Mr. P to give him what is so awesome. He has to discuss it on the show here this week in his Market Taker question of the week. Mr. P, what you got for us this week?
Well, this kind of relates to the question that we were talking about just before this about, basically straddles being underpriced. Basically, I'm kind of paraphrasing here. But no, I guess I'm not paraphrasing at all, really, am I? And so a question that I get asked often is, hey, are there any is it ever a good idea to buy straddles going into earnings like the day before? And yeah, that answer is definitely yes. I think it's important to be very careful about it because straddles can be tough to trade. But I was just looking at this. I actually just posted on Twitter for all you Twitterers out there that take a look at Zillow. If you look, just simple math. You don't even have to know anything about implied volatility or the Greeks or anything, just simple math. If you look at how much a straddle in Zillow costs right now, like the front expiration, the one that expires this Friday in 2.5 days, based on the past gaps, how do you not buy that? I'm long them right now because how do you not? That I would call an underpriced straddle for sure. That's one of them where I'm not going to fade it and do one of my calendars on.
Yeah, people ask us a lot about should they buy straddles? What's the deal with straddles? Why don't you talk about straddles a ton here on the show? You just kind of pointed it out. They're very opportunistic type trades. You can't just be long straddles all the time. You will be suffering the death of 1,000 cuts, which is decay, listeners. We talked about that many times on the network. Go back into the archives, listen to some of the episodes we've done all about straddles. We've gotten into that in the past, but there are times when it worked. Dan just pointed out one potential opportunity. We talked about them a lot at the beginning of last year, Q1 of 2021 last year. And what was going on during Q1 of last year, listeners? As things were rocking and rolling, things were exploding. It was the beginning of the meme stock phenomenon. Names were shooting up to triple-digit vol, routinely making huge moves. And in that kind of environment, being long a straddle can work. So you just need that really extreme move to pay for it, because otherwise it's going to erode in your face very quickly. If you don't get the move you want pretty quickly, it can be pricey. But if you have that rock'em sock'em robots environment, straddles can be an intriguing way to go. Speaking of ways to go, Dan, let's go out to this question here from Mander. Mander wants to know, is there an effective way for retail traders to execute dividend arbitrage in their accounts without having access to professional level margin and other benefits? I don't know what's going on with dividend arb. Dan, as you'll recall, we got a question about this when we were doing that Harvard panel a week or two ago as well. People apparently have dividend arb on the brain. Maybe someone put it out in a webinar or something. I don't know. But all of a sudden, everybody in a retail account, Dan, wants to go out and capture divvies.
Yeah, you know what, Mark? that is what happens. Like somebody says something in a webinar that's, well attended enough, and all of a sudden everybody, jumps on it. Like there was this time, it was probably around 2015, right? Maybe 2014, where I was at this trader conference and I was giving a presentation, and it was all on the Greeks. And I was like, yeah, we're not going to talk about Rho, because Rho doesn't matter now, and it's not going to matter for, at least a few more years. And there were like 2 or 3 people in the room that like gasped. They're like, what? No, interest rates are going to start going up right away. And I'm like, what are you talking about? And like, I talked to one of the guys afterwards, and he's like, yeah, I just walked out of a presentation and this guy said, where interest rates are going to go up and they're going to skyrocket. I'm like, first of all, is this guy stoned? Like what, how does he come up with that assumption? It's not just hindsight. Like that was a pretty weird statement to make in 2014 or 15. But, it kind of came into favor for a brief moment, and then people realized that guy was smoking something crazy, and didn't come to fruition. So that's probably what it is. Somebody threw it in a webinar, and 2 weeks from now, nobody's going to talk about it again, because, the answer is no. There is not an effective way for retail traders to execute dividend arbitrage in their accounts without having access to professional level margining and other benefits. It is not possible, because you have to trade massive amounts. And there were some some brakes put on that by the OCC, as I recall. I don't even recall exactly what they were. But when I played that game when I was a floor trader, I'd trade like a couple thousand in the money call spreads, and maybe you make $400. The massive amount of margin it requires is just it's a crazy game, even for professionals, but especially for retail folks.
Yeah, the size involved, the way these things used to go up for size, and you could see there was one exchange that pretty much just specialized in this paper. They're the only exchange that didn't put limits on how much size you could actually do with these strategies. That was the Philly exchange. So you saw all these trades go up there. And there would be millions of contracts going up in some of these obscure names on certain days, all chasing maybe a name that had a couple of thousand contracts worth of open interest, right? So, yeah, there's a lot to this. You have to do size, which A, is usually the enemy of retail. B, as Dan mentioned, they have made some changes now to the traditional way this used to be done with these used to effectively do wash trades. And it was a kind of a game of playing on the way options are settled, that you could kind of get the free dividend if you did it right around the time of the X date, and all that stuff's kind of gone away. OCC has cracked down on a lot of that stuff. You can do some verticals now and things, but you can't do the straight up kind of wash trades that we used to do on the floor. Or if you can try to go out and people want to try to capture it with a synthetic, buy the stock and then sell the synthetic against it. You go price that out. Go look at your typical name and see what you're going to be able to do that for. Because there's a spread to that, obviously. There's a bid-ask spread to each side of that trade. And so if you're trading all sides of that spread, that's also going to cost you money. And they don't give away dividends for free. You can, it's not like the market makers don't know this trick. So you can go price it up and see what it's going to cost you in terms of just slippage from an execution perspective. Now multiply that times all the contracts you're going to have to do to actually make it meaningful. And you'll see why we say this is, even for professionals these days, this trade has become very difficult and very capital intensive. For retail, not really the way we would go. But hey, reach out to us if you decide to try it. Let us know your experience. I'd be very curious to know. Let's go out to Becky. Looks like she listens to us on the old tubes. She said, I'm new to trading. Becky Martinez says, I'm new to trading. How can I make more profitable investments in crypto as crypto is being dormant now? Well, you're lucky, Becky. It has taken off since I think this came in about a week ago. It has been moving over the course of the past week. If you listen to our crypto rundown program that we do here on the network every Monday, we've broken it down. Vol has started to creep back up, which we haven't seen in a while. It's been pretty much eroding since the big sell-off back a few months ago. And we've also seen the skew shift a little bit. So it used to be predominantly bid to the puts. Now it's flat. At least it was as of the last episode we did. It was flat in Bitcoin and ETH, and it used to be pretty biased in Solana as well, getting close to flat there as well, which shows that the options market isn't pricing in a certain direction, a fear or any sort of premium in any direction. It's kind of shrugging its shoulders, doesn't know where things are going to go. So that makes things maybe a little bit more intriguing for you if you are looking at those. They are moving again. Vol is starting to creep up a little bit again. If you're listening to this show, I'm guessing you probably want to trade in a securities account. So that limits what kind of crypto you could use. So then we have talked about BitO before on this show. I know, Dan, I know you've traded in the past. I know you talk about it with some of your mentees out there. So BitO is a pretty decent option as well. It doesn't suffer pretty terribly from the roll yield. I kind of thought it would when it first launched. I was very skeptical. And as we've crunched the numbers and as we've seen over time, the way those futures trade over there at CME and the positions, they don't really have the same kind of setup that you'd see in some of the vol products where they super crazy aggressive contango, which really leads to a lot of a negative roll yield on products like VXX and things like that. We don't see the same setup in the Bitcoin future. So that leads to much less in terms of roll yield crushing that product. So it does track fairly well. And from an options perspective, you're listening to an options show, so I'm assuming you want to talk about options as well. From an options perspective, BitO is crushing it, 80,000+ contracts a day. So you could do worse than if you wanted to look at BitO. Whatever strategy you're looking at, I would definitely say if you're interested in that, staying in the big liquid names, you're interested in Bitcoin, I'm sure most people are on the crypto front, then you could do worse, I should say, than getting out to BitO. Used to be selling puts out there was pretty attractive with the pretty strong put skew. Not quite as attractive now, so bear that in mind out there. But it is moving around a little bit more, so it might make some harvesting strategies. Maybe you want to buy BitO, sell a covered call. That call wing's looking a little bit more bid now, so intriguing things afoot. Mr. Dan, I know you've looked at BitO in the past. What are your thoughts on BitO? And maybe you have some other suggestions for Miss Martinez here. She wants to make her crypto investments more profitable.
Yeah. One of the things that I have been very adamant about in the past is to only trade crypto derivatives that have central clearing. So exchange listed ones, like real exchange listed ones, not to be whatever, but real exchange listed ones are really important. Something like some exchange that's, in New Zealand or, some Caribbean country that is created by some guy in his basement, what was that original one a long time ago? Start with a G. I forget right now. It was named after the card game. Anyway, you want to be careful of that because those exchanges can just disappear. So doing something like BitO or anything exchange listed is a way, way better bet just because you're protected from the black swan scenarios that can really be horrible under some circumstances.
Yeah, check out BitO. Becky, whether it's just to kind of buy it and put it in your portfolio, whether you want to trade some options around it, sell covered calls, whether you want to sell puts to get into it and then get into BitO at a lower level, buy put spreads, whatever you're thinking about doing. You don't really give us much insight into that, but I'm curious, maybe follow up with what you're trading now. That might give us a better starting point, and then maybe we could help point you in some interesting directions. But again, if you're looking at optionable crypto trades you can do in your securities account, you could do a lot worse, I should say, than looking at BitO. Let's go out to this question from one of our pro members, Mr. Chris Lovell. He says, should retail investors hedge against tail risk for their overall portfolios? If so, what do you think is the best way for us to construct the hedge? Dan, this is an interesting area. Like a lot of things in the world, of options. It's very subjective. What one man's tail risk is another man's very different thing. I've discovered that over the years. People have come to us pitching all sorts of what they term tail risk or black swan funds, only to find out that they're not at all what you would think of. Most people, when they think of tail risk protection, they probably think of some sort of out-of-the-money put or hedging strategy, yet I've seen every combination therein, from being in cash to cash with a little bit of calls to all sorts of madness being described as tail risk or black swan type funds. Maybe let's start there, Dan. What is when someone says to you, hey, I want to hedge my tail risk, how do you view that? What is your viewpoint on hedging tail risk? And then B, do you think it's worth it for retail to do that, to bother hedging their tail risk? And then if so, do you have a way that you think is optimal? A 3-part.
Yeah. I mean, when I think of tail risk, I think of, what I think of is the classic definition, right? Tail risk is protecting against these like 6 sigma events, or, even 3 or 4 standard deviation events, I guess. But going out there and buying very, very far out of the money puts is where most people's minds go to. But theoretically, it could be calls also, depending on exactly what your motivation for the hedge is. So yeah, like that's the way I think of it. And hey, shout out to Chris. What's up, my friend? That's the way I look at it. And I imagine people can look at it different ways, but I'd be hard pressed to figure out what those ways are.
Let me lay down some other ways for you here, sir. But a lot of people, the one that I caution against a lot of people come to us and they think of, VIX calls. VIX calls are a great tail risk hedge. And, I think of them more as a kicker. If you have the aggressive downside move that you're really scared of in your broad portfolio, then you're going to see a nice, strong response from VIX. But look at over the last few months, we've seen a pretty decent sell-off in most of the major indices, right? And if you're out there loading up on far out of the money strikes in VIX, 35, 40, whatever, you're picking 50. And we've seen a lot of people loading up on 75s, 80s, and pars and above in VIX over the last few months. If you've done a lot of that, you haven't really been deeply enthused by the return you've gotten on your investments. It certainly hasn't hedged, quote unquote, your downside move in, let's say, the S&P. That's why I caution against trades like that being viewed really as a hedge. Just like an extra kicker you have in your back pocket in case the worst really happens and the market really melts down. But even then, we saw some pretty aggressive 2+% downside days, and VIX didn't really budge that much to the upside. So I think if you've been looking at that as your quote unquote tail risk, you've been deeply disappointed, which is why I caution people to not look at that as your tail risk. I think that's more of like a kicker you have on top of everything else you're doing in case something really crazy happens, because VIX can outperform. We've seen it happen, obviously. March 2020, February 2018, all these times when VIX just explodes to high heaven out there. If you have some upside then, it can be a great thing. But outside of that, it's not really a hedge. And we've talked recently on the network, shows like the Advisor's Option and others, about some interesting strategies you could do. Dan mentions the far out of the money puts. That's the traditional kind of tail risk hedging. And it actually can work fairly well depending on how you set it up. We've actually been exploring recently with Matt, who's been on this show just recently, just talking about earnings vol, running the numbers. He does a lot of back testing over there on what we call quote unquote garbage puts, very, very far out of the money puts. Nigh on worthless puts and putting a bunch of those in your back pocket for a rainy day. And you might say, well, there's no delta on those. What's the point of those? And you're right. But there is a vol component and there is a skew component to them. And they could pop dramatically outside of any sort of delta move you would expect if things really start heating up to the downside. And so the caveat with those is that you have to be very judicious with how you set them up. And you have to be very quick on the trigger finger to take them off because the little pops they get are short-lived. But if you do it well, it can be a very interesting setup. But at the end of the day, I'm going to agree with Dan. I think the basic kind of decently far out of the money puts are going to be the best way to hedge yourself in any of these environments. The problem is, as you all have discovered, that's expensive. So now we get into all the other strategies we talked about here on the network. Let's say you go out 6 months and you buy, 10, 15, 20% out of the money puts, whatever the case may be. That's still going to be pretty pricey. Go price it up in SPY right now. It's going to cost you a pretty penny. So you have to come up with something else against that, whether it's selling very far out of the money puts against it. But then again, now you're talking tail risk is to hedge the black swan event, right? If you're selling farther out of the money puts, you're not quite getting that black swan protection you maybe want. So there's other things you could do, obviously selling calls. We've talked about time spreads, other things. There's many ways you can go about that. But at the end of the day, those meaty puts in your back pocket on a crazy day, still the only reliable inverse correlation. Look at this entire year. Everything has moved with a correlation pretty much of close to 1. When it hits the fan, correlation goes to 1. You have that put in your back pocket. It can be a helpful thing. Just remember, there's challenges with just buying puts as well. You can't just buy a put and set it and forget it and think you've done your due diligence. A little bit more effort involved in that. Dan, anything else you want to add on tail risk before we keep rolling, sir?
Yeah, one more thing, Chris, just if there's a best way to construct it, it kind of goes with the old adage, buy them when you can, not when you have to, right? Because, I think we've talked about this in some of our classes. People love, it's like a hobby for some people to buy puts at the bottom. And oh man, that is, it's just disastrous because you lose money on the way down and then you lose money on the way up. So, timing is everything. Another thing we talked about on the show is just consistently being long puts in perpetuity forever is a bad bet. So, when you're looking at a market and it starts getting a little lofty and you want to protect your gains, then that might be a good time to think about it. It's not when people's brains typically do think about it, but that's when you should be thinking about it.
Now, let's keep on rolling here to Benji. Benji has a timely question for us, Dan. Benji wants to know, are there any great Fed week trades that you can remember over the years? Someone who really cleaned up on a big Fed move. Fed week. Bit of a different beast now than when I think of Fed week, Dan, and maybe you think of it in the same way, maybe not. When I think of Fed week, I still harken back to the halcyon days of Greenspan and the briefcase and decision imminent everywhere all over the floor, right, Dan? That was about as big as it got, I think, from a Fed perspective. Everyone hung on every word that Greenspan had to say. Everyone measured his briefcase. Oh, it's a thick briefcase. We're in for it. Here we go, guys. Buckle in. It's 2 inches thicker than it was this time last week. Decision imminent. Everyone hung on every word of that. That was huge. And I'm trying to think of a modern analog, if that is still the case. Obviously, Powell, his speech is obviously still very market moving, still very important, but it just seemed like everyone was consumed in that back then. Again, a different era, different time, but still intriguing nonetheless. And as I look back both in the SPX and in Intel, I'm trying to think of any that leap off the top of my head now in terms of someone who came in and put on obviously we saw a ton of paper in and around those weeks. And I'm hard pressed. I can't think of any single individual trades where I look at it and say, wow, that guy spot on. He really just crushed it. It made $10 million on one print in Fed week. Nothing leaps off the table to me. Is anything jumping out at you, Mr. Dan?
There's nothing that I can think of offhand, really. But I'm sure there have been, right? Because, geez, do you remember? I was still trading back then, and I bet you were too, Mark. It was like in the final Greenspan, probably year, where there was it was a 75 basis point hike within 1 week. There was a surprise 50 point hike and then another 25 point hike, or vice versa. Somebody made some pretty good money on there, but chances are, it wasn't something you could predict unless you were, had inside information or something. But I bet there were some long gamma market makers who got pretty lucky that day.
Yeah, obviously there were scenarios. Who was this, Benji? People did all right, and we on the floor hedging our gamma all did all right. Just nothing leaps off the table at me. Says that was a screaming great trade around Fed week. If you have one you've seen, listeners, thought that was awesome. Right in again, you're out there on the trading floor. You see so many trades all the time. Sometimes it's hard to. Oh, that one's amazing, and that one stands out, and that was exactly done for this purpose with the Fed. But it's an interesting question, Benji. I'm going to have to mull it over a little bit after the show and see if I could sink my teeth into any specific Wow, that was an amazing Fed week trade out there. I mean, mostly when I was in the S where we'd see those, not as much in the single name stuff like Intel. Those obviously Fed more a macro type player, but interesting stuff nonetheless. I'm going to mull that over, Benji. Maybe I will come up with another answer for you on a future show. Unfortunately, Mr. Dan, that music means we've come to the end of it for another episode of Options Bootcamp. But before we go, Mr. Dan, if folks are intrigued, they want to check out the world of MTM, where should they go? What should they do?
Well, we'd love to have you make your way on over to markettaker.com, because that's where we live, and join our community. You can actually join it for free for a limited time, which I've been saying for a while. I'm not exactly sure when that time ends, but it will at some point. So yeah, make your way on over to markettaker.com, 2 T's in a row, and join. And you can get for right now complimentary access to our chat room, which is, there's a lot going on in there these days with our earnings trading and our credit spread trading, and you might pick up some great stuff for free.
There you go. Check out the ongoing partay over there at markettaker.com. And if you're in the mood for partays, then head on over to theoptionsinsider.com/pro. It's a place to go to get live access so you can heckle Dan and myself for this show, everything else we do here on the network. Great pro Q&As. You get those every week. Of course, exclusive options oddities, get those every week as well. Exclusive pro podcast feed. All the episodes. So if you're coming in now, don't feel like you missed a lot, because you can go back and check it all out. It's all there for you. 100+ episodes of great pro content waiting for you on the pro podcast feed. You can put that in any player you want. It works on all of them. Or you can grab the app there to get that as well. And of course, our giveaways. We're about to give away another great pro trading crate to one of our members. So theoptionsinsider.com/pro is the place to go to join that ongoing partay. That's going to do it for us here on Bootcamp today. Back again in a little bit on demand with Brian and Options Playbook Radio. That should be fun. You always have some great actionable trade ideas and education and everything else. Check it out if you haven't done so already, listeners. Of course, you can go to optionsplaybook.com or Options Playbook Radio on your podcast player of choice. Back again tomorrow with episode 2 of the option block for the week, as well as This Week in Futures Options, breaking down all things futures options. Friday, the world of volatility comes into focus with Volatility Views. Then back again after that for all you pro folks with Options Oddities. And we kick it off every Monday, listeners, with the option block. We get pretty wild and fun on that show on Mondays. After that, the crypto rundown, delving into the world of crypto derivatives. Tuesday, for all of our pro folks, back again with another great pro Q&A session, all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.